And that's after the conflict in Ukraine caused foreign investors to flee Egyptian treasuries. Now, data released by the central bank showed forex reserves at the end of March fell to about $37 billion from almost $41 billion a month earlier. Well, CGTN's Yasser Hakim has more on that from Cairo.
Egypt's foreign currency reserves had been gradually recovering from the outbreak of the coronavirus pandemic 2 years ago and reached $40.9 billion, up from $36 billion. But the fallout from the conflict in Ukraine has sent Middle East's most populous nation back to the drawing board.
Part
of the dollar revenue for Egypt comes from tourism, with 40% of it from Russia and Ukraine. The Russia-Ukraine conflict has stopped tourists from the two countries, which hit the tourism industry and foreign currency revenue. In addition, the hike in oil prices, which at one point reached $139, has doubled the country's import bill, as authorities had budgeted oil at $60 a barrel. This has consumed our dollar revenues.
The central bank had released a statement in which it said it had tapped into its reserves to cover substantial foreign investor outflows, partially cover local demand in order to ensure the availability of imported strategic goods, and repay external debt obligations in a timely manner. The measures have come at a huge cost, as 10% of the country's foreign currency reserves evaporated in March, which prompted officials to take urgent measures, including devaluing the local currency.
To stop the losses, Egypt floated the Egyptian pound, raised interest rates and issued bank deposit certificates with 18% returns, which attracted local investments exceeding £425 billion, or about $23 billion. Another option Egypt is seeking to prevent further drop in reserves is IMF assistance. We expect to receive $2 billion from an original $5 billion emergency financing that we have requested.
And analysts are calling for another raft of measures to retain the North African state's hard currency inflows.
To keep foreign investments, we have to offer a lot of incentives and tax facilities for foreign investors. The Egyptian stock exchange must be revitalized so as to stimulate the market by encouraging listings and releasing IPOs of successful public companies to attract foreign investments. The most important thing is to increase exports. The economy will not prosper unless several initiatives are established to encourage production so that exports can exceed imports.
But efforts by authorities to reverse this downward trend have been met with concerns growing over a prolonged conflict in Eastern Europe.
If the conflict continues, we will see more depreciation in the foreign currency reserve, but not at the same rate as the current period. We expect reserves to drop by $2 billion instead of $4 billion in the next period because of the measures Egypt has taken to lately prevent more hard currency losses.
Meantime, the central bank has received a major boost as Saudi Arabia pledged to deposit $5 billion in the bank to bridge the gap, while other Gulf Arab nations have also promised to support Egypt's economy with more funds. Yasser Hakim for CGTN.